Rick Santelli is standing by at the CME in Chicago. Rick, we've got about 1 minute before we get these numbers, but obviously this is really important with the Fed meeting today, first day of a two-day meeting.
Yes, it's not only important for all the obvious reasons, but as we look around the U.S., it's important for some of the outside reasons, like the U.K., what's going on with regard to their earnings, their inflation scenario, their interest rates have moved higher. Their central bank most likely has more work to do. Bank of Canada comes back and alters the psychological landscape as well. Our pause is only temporary. All these are big question marks, and CPI today could go a long way, Becky, in erasing some of these question marks. One area I'm going to pay attention to, and obviously everything's been so politicized, but when we look at the year over year on the CPI headline, since it peaked in June of last year at 9.1%, it's come down every month for 10 consecutive months. Will this be the 11th? No other sector in the CPI series can say that since its high watermark, and we're only a couple seconds away. We're going into this with a 368 yield on 10s, and the data starting to hit the wire. Rates are moving up already, so somebody seems to have this number before I'm seeing it on the wire services. We're now up to 372, 373, up 1/10 of 1% on CPI headline, exactly as expected, up 4/10. If you look at core, stripping out food and energy, that's exactly as expected as well. Year over year, 4%. Year over year, 4%. We're expecting 4.1. Our last look was 4.9. So indeed, this continues that streak. This is the 11th consecutive month since 9.1% in June of last year, which was the highest level since 81. Each successive month has been lower. And if we look at core, which many believe is the most important, 5.3%. 5.3, we're expecting 5.2, so it's 1/10 higher, but it's 2/10 lower than the rearview mirror, which is 5.5. This series peaked in September of last year, Becky, at 6.6. That was a 40-year high. However, we did have the month of March, which moved from 5.5 up to 5.6, so it hasn't been continuous. This is lower. We do see that interest rates have been moving around quite a bit. We're now right back to this 368, 369 level. And if you're looking at intraday 10, we've had a lot of little noise volatility here. But if I had to summarize, as I think the market is now, it's definitely a bit better than expected. These are still sticky numbers year over year, but we are making progress. We see that the pre-opening equities are a bit higher than they were before this number. We're up about 40 points in the pre-opening Dow futures.